The following is a presentation of TFNN. Live at TFNN, the Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, the Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the August 7th terrific Thursday edition of the Money Masters Show. I'm your host, Steve Rhodes, author of Mastering Probability, the daily newsletter service that is the intelligence for creating financial freedom. Hope everyone is off to a great start of their day. Let's make sure that you and I, that we do everything that we can do in our power to have an extraordinary Thursday. I'll do everything I can during the next hour to take a look at different patterns inside the marketplace. We'll use technical tools such as that beautiful lightning bolt pattern. That's the A to B equals CD. That helps us to project price where things are headed to. We'll also use Fibonacci expansions and retracements. We'll use channel lines, trend lines. We'll use Japanese candlestick charting. In fact, we'll use anything that we can to help us identify where price is likely headed to. Of course, this is a call-in talk show. That means you can give me a call at 877-927-6648. Go ahead and do it. Overcome that little hurdle, that little anxiousness of calling into a live show out there. I know what that feels like, but you can go ahead and give us a call. It's always nice to overcome any little hurdles and big hurdles that you have in life. You know how that feels. Again, our call number is 877-927-6648. Internationally, 727-445-1044. It is terrific Thursday. This is Tiger Financial Network. I'm Steve Rhodes, and welcome to the show. Right now, the Dow is trading up 37 points, trading out at 16,482. S&P up 4 at 1924. NASDAQ Composite up 13 points at 4368. Russell 2000 up 3.5 at 1129. New York Stock Exchange up 11 points. VIX Index off about 87 cents, down about 5% this morning. You've got gold off $2 after a strong day yesterday. So just really traveling sideways, more bullish than bearish. Silver out here off 5 pennies. It's trading out at $19.97. Light sweet crude up 12 pennies, so pretty much unchanged out there. Over in Germany right now, the DAX is off 10 points. FTSE's down 10 points out there, so no Oktoberfest celebration as we take a look. Of course, it's only August Fest out there. I think that's a Red Lobster celebration, isn't it, for the seafood lover in you? In any event, let's go see some food in the marketplace out here. We've got Stratasys. That is leading the charge, the upside. That's up $15. I don't even know what that meant, but it just came out. It just flowed out of me. That's up $15. That's up 15% out here. You got Middleby Corp. MIDD is the ticker symbol. That's up a nice 13%, up $10. Out with numbers here. Second quarter sales, $424 million versus $363, so a nice pop to the upside. You've got net earnings, $48 million versus $37 out there, so that is that's nice. Let's go take a look at the stock chart, see where it is headed to, right up into a swing point, right up into a high volume bar out here, but no wide price spread, just a lot of volume behind the move out here. It does have some, for this stock, not a lot of volume behind it. 200-300 shares, 200,000 or 300,000 shares a day, not 200 or 300 shares out there. But if it can break above this little resistance level out here, we'll call it the June 3rd area. The high out there is 85.22. Then it'd be off to the races. It has broken a downtrend with conviction. Well, let's take that back. So far, the volume behind the 290,000 shares. Nonetheless, it has broken a trend line, is what it looks like. That trend coming back to that February 27th level. So it's done it with some conviction out here. Looks like the trend in Middleby Corp, MIDD, the trend to the downside is over. If you take a look at just natural retracement levels here from the high to the low that came in here back on the trading session just a few days ago on August the 1st, you will see that it's at the 0.382 retracement level. $90 is your 0.618 level. I would say that is most likely the target area. Let's go to our man Victor in Paramus, New Jersey. Victor, thanks for calling. Thanks for holding this morning. How you doing?
Yeah, one quick question. I see a lot of gaps on SPY since 2013. There's gaps all over the place. So if you fill all those gaps, what kind of retracement is it? If you go back to 2013, we gapped up the first day of the year. And there's all gaps all over the SPY. So if we have a retracement and everybody's predicting a crash, what kind of retracement would that be? I mean, you think those gaps will all fill?
No. I do not. I think that when you're taking a look at gaps on charts like the SPYs, IWM, Russell 2000, the diamonds out there, don't give them as much significance, because what you've got is what's going on in the futures market really catching up to what's taking place out there. So, whereas a gap on an actual stock itself, because that's the underlying instrument is the actual stock, those have more meaning to me. So my immediate answer to you is to not pay as much homage to the stops inside of the SPYs. But your question, at this stage, you're of the belief that the market is headed south. Is that what I'm hearing?
6 times 3, and then you subtract. You take 666, you times it by 3, and then you subtract 666, and that's where we're going.
Okay, all right. So if we take a look at this one moment at a timeout here, if you take a look at the SPY, what I can tell you is that the first real target area that you should be watching for, Victor, is really the swing points back in April. And that would be the real target area, your first target area. If I'm going to take a look at even potential A to B equals CDs that may have formed out here inside of the SPYs and take the most aggressive route that I can take out here, the 1-to-1 A to B equals CD only takes you down to 186.81. You're trading at 192.68 right now. A more aggressive takes you to 1.272 to about the 184 level out there. So, you got to just take this one moment at a time. If I put up a weekly chart for you, let me do that. Let me come over here. Let me do this. And I'm going to use the SPY itself versus go take a look at anything else. And I'm going to switch over to a weekly chart for you. And if we take a look at the weekly chart, this using the Rhodes Momentum Indicator strategy, I mean, this needs to, before it can even start to come to fruition, might have lost Victor there, it's got to break the 50-period exponential moving average. That is at about 183.57 out there. So know that Victor dropped. I know that there are some absolute significant signs that we have to pay attention to, like inside the Dow, as it made the same type of top from a monthly chart. We covered this yesterday. I'll go ahead and take a look at that with you right now. I'll come over and we'll take a look at and I'll go put the Dow up here. And then, but we always have to keep things in perspective out here. Give me a moment. We'll put the Dow chart up here. And the same topping pattern that was in place 2000, 2007, 1987, 1929, all across the board out here is the pattern that we saw form last month in the month of July. You've got a price RMI signal in place out here. It's where you make a higher high. You do it on less relative strength. You have a bearish engulfing, which we are a bearish pattern. You got the whole 9 yards yesterday. But at the same stage, we're really only in the cautionary zone out here. There's a lot of work to the downside that must be done in order for this to come to fruition out here. So there has not been, at this stage, there has not been the damage done yet to the Dow to suggest that is the case. We've got a warning shot, a big warning shot across the bow this month here. And put it in perspective, in a second-year election cycle, which is where a second term, not second-year election, second-term presidency, it doesn't matter who is the president, the two worst months are August and September. Now, maybe most of you knew that out there. I don't know if you did or not. Of course, that's the odds over the last, 50, 60, 70 years out there. And that says that, hey, this month of August is very important, because if we don't see, if we don't see some follow through on the candle from last month to the downside, then that premise that even this candlestick pattern out here, even this price pattern out here is still in jeopardy. But nonetheless, we've got great resistance. It's a resistance going to be the high from last month out there. Now, what I also want to do out here, Victor, hopefully you're still listening on the show, but if you're not, go back and listen to the archive. Of course, how would you know? You wouldn't hear me. Let me put this stock chart up on the screen out here. It's going to be the futures contract. And so I was doing this during the break between the two shows. This is the NASDAQ daily. Now, we take a look at the NASDAQ Daily. If you're watching us on Tiger TV, thanks so much for doing that. If you're listening on your radio or your mobile device at TFNN.mobi, let me describe to you what it is that we are looking. Remember, you can catch the live stream of the show by going to the homepage of TFNN.com. Upper right-hand side, you'll see a button, 3 little smartphone devices, and you'll see that show streaming live. And maybe you're taking advantage of that nice offer that eSignal's made to our listeners out here at TFNN for a 60-day free trial, not 30-day free trial. And then you can watch Tiger TV from within the application. That's a beautiful thing. Just hit that media button inside of the system, and you will be on your way. Now, if we take a look at this rising price channel out here, we take a look at the rising price channel. I'm coming off of these are the yellow diagonal lines on my screen, moving from lower left to upper right. And is there anything really bearish about this pattern just yet? For any of you looking? And the answer to your question is no. Now, it has formed a high out here with less relative strength. You can see the diagonal line on the bottom of my screen out here. On the eSignal software, I don't have it drawing it to the top. That's okay. We can visually see that out here. And you do have price that has moved all the way back down to the bottom of its rising price channel until it breaks through that area. And this morning, early morning, was a test of that level. Yesterday was a test of that level. It was also a test of the market profile low, which is at the 38.53 area. So you see a break of this area. In the NASDAQ, the trend is still to the upside as we speak right now. Of course, it breaks that. Then you're looking for a retest of that level and a confirmation that it's done with that trend that is in place out here. So on the daily basis for the NASDAQ, it is, even though it went through the big trouble that it did back in the February time frame, the April time frame out here. This is the NQ. It is still pretty darn strong out there. Different story when we take a look at the Dow futures out here. But if we take a look at the Dow futures, let's just look at the Dow futures on more of an intra time period chart out here. Let me just refresh this out here so I can take a look at it. And what you've got the Dow futures trying to do right now, they're trying to make this same price relative strength divergent bottom out here. They've actually confirmed it as we speak right now. That little bull sash candle that took place out here yesterday at 10 o'clock. We had some follow through the noon time period. What the Dow futures are struggling with right now, here's where their struggle is. It's very clear. It's this thick red line coming across my screen out here, and that is the 50-period exponential moving average out here. You can see price moved right into it as we came on at 10 o'clock. That level is now acted as resistance. That number, by the way, is 16,451. That's a number that you want to be paying attention to today, 16,451, because if, in fact, you can get above that, that will say that there is some more pep in the step on the way up for the Dow futures. And if it can get above that level, that says you could be looking at 16,694. But it's got to break above that in order for that to come to fruition. And that is on the 120-minute time frame for the Dow. Level of support in the area to be watching inside the Dow, that's going to be the 8 a.m. session from yesterday morning. That low out there is 16,272. So we can look at the bullish, we can look at the bearish side. Very bearish if it breaks at 16,272, especially today. 877-927-6648. We'll be right back, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow is up 38. The S&P is up 5. NASDAQ up 20 points. And let's go take a look at the ETF structures for the indices out here. We had Victor call in about the SPY. But let's go take a look at, different time frames. Always good to take a look at things over a different time frame out here. So let's go switch this over to the weekly chart. And if we take a look at the weekly chart, what I want to do, and you can do this on your screen as well out here, just a very simple technical tool, which is understanding the trend. Let's say you don't have any fancy schmancy stuff out here. If we take a look at tools-wise, that is, if we take a look at the SPY and we come all the way back to the time period of October of 2011. This is a weekly chart that we're looking at. So the week ended October 3rd, 2011. You can see a significant swing point low that was formed there. And if you just simply use the low of that session, that's what I'm going to use, or approximately the low of that session, and then you just simply kind of take some type of a trend line tool, and I would use here. We're going to do both a trend line and a channel line out here. But so from a trend line perspective, you just simply go ahead and use the low in November of 2012 out there. The weekend of November 12th. You can see that the SPY has got a long way to go, and that could be a target area. The bottom of the trend. We were looking at the NASDAQ on a daily basis, the NQ. It was a shorter-term time frame, I believe, that I was looking at when we took a look at that rising price channel that price is traveling in. But we can do a price channel as well out here. And let me try to do this. There we go. Get rid of that. Okay, now let me just pull it back this way. Now on the price channel out here, let's go ahead. We'll grab the tool to do that. I'm just going to use the actual body of the candle because the body of the candle is truly the essence of price out here. And I'm just trying to identify, if I can, at least 2 or 3 co-located opens and closes. I'd say that's about it, where that yellow line is on my screen out here. So that's going to be the bottom of the price channel. And the top of the price channel is probably right about there. And I can go ahead and pick this up, and I'll just go ahead and move it back just a bit out here so we can take a look at that price channel. And I'm going to get rid of the trend line as we speak right now. So there is a longer-term price channel that the SPY is trading within. So I would say any continued move lower inside of the SPY on a weekly basis, that's the first area where it needs to break down below before this larger term trend is out of place. Now, the reason why I say that is because if we go back and we take a look at the S&P 500, right, so we look at the underlying index out here, and we take a look at this pattern here says what? This pattern says that there was a 16-year consolidation pattern. That 16-year consolidation pattern went from a high of, we'll use the 2000 high as the example, 1552 and change, all the way down to the low. We'll use the October 2002 low in the 768 range. You just subtract the two, you're going to get about 800 points. Add 800 points to the top, and what you're going to do is you're going to get a price projection of 2350 out there. And that is on a longer-term basis where the S&P wants to move to. Now, look, the 6-month unfavorable seasonal cycle, which is what we're in right now, the so-called sell in May, which does not necessarily mean sell on May 1st, by the way. It can, but does not, on average, that's not the time to actually sell. We're in the 6-month unfavorable seasonal cycle. I just mentioned during a second-term president, it's August and September that are your weak link months out there. And so continued move lower inside of the SPY, inside of the S&P, takes you perhaps down to the bottom of that trend line out there, or the rising channel line, I should say. And then from there, you ought to see the market because we move into the favorable seasonal cycle, and that begins, in essence, on November 1st, October 31st out there, which could mean it would take place beginning the end of September, something like that, right around the October 1st area, if a low is formed. So that's really what you want to focus on. Now, this is a weekly chart, so this would be more for intermediate term type traders out there. And it's not until this level gets broken that from an intermediate term standpoint that you have to get extremely worried. Now, look, that would be a lot of pain to take here. If I take this out until the end of September, let's say it takes until the end of September to get down into that level, you're probably looking somewhere around the 179 area, which is another 189, another 13 points or so to the downside inside of the SPY out there. But that's in essence what you are looking at. Now, that's on the SPY. That's on the longer-term basis. And in my opinion, it's always good to just kind of keep things in perspective out here. So that's the longer-term piece. Let's go take a look at the. Let's do this for the. Diamonds. Let's do this for the Dow diamonds. We'll do that when we get back from the break. We'll do the same thing. We'll go take a look, see if we can identify any price channel lines out here for the diamonds. And looks like, we can come all the way back to 2009 if you'd like. Maybe that's what we'll do. 877-927-6648. Steve Rhodes, TFNN. We'll be right back.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back to the show, folks. The Dow's up 39 points right now. S&P is up 6. NASDAQ composite up 21 points. Before we went to that hard break, we were taking a look at the ETF structures for the indices out here. And we're taking a look at a little bit longer-term perspective out here. So let's go back let's go take a look at the Dow Diamonds. We did the SPYs out there. During the break, I went ahead and we used this. I drew the rising price channel, and I used the same swing point area, which means I came all the way back into the October 3rd, the weekend of October 3rd, 2011. And that's the bottom of my price channel. Actually touches the bottom of September 19th, 2011. So it touches the close of that candle, the open of the session on October 3rd. It basically uses the close of November 12th, the open of the next session on the 19th. It uses the open of the session on December 31st, 2012. Remember when things were going to fall off the cliff, so to speak, out here. So a really well-cemented rising price channel. In order for there to be real serious intermediate-term damage to the market. Now, this is not going to catch a market top, that's for sure, but this is going to tell you if there's some real serious trouble inside of the markets out there. You're going to see a break of this rising price channel. I guarantee it. I absolutely can guarantee it. Likewise, a move down into the bottom of that rising price channel becomes a buying opportunity so long as price does not break through that area. Is price going to get down there? I don't know. I can tell you right now, price is hovering around the midpoint of that entire channel, and I'm using the upper portion, which is in essence using using the open of the trading session here from the weekend of July 18th. And then it's using the close of May 6th, and it's using the little doji candle the following week. It's using the open of the session on December 23rd. So it's a relatively well-cemented upper portion. Now, I mentioned going back to 2009, so let's go take a look at that. This is just trying to keep things in perspective out here. What you'll see is at the bottom, just how well cemented is the bottom of that rising price channel. What you're going to see right in front of your mind as Stevie Copperfield, goes ahead and draws that pattern in here. And what you're going to see is it uses the exact same, so it's just extended to the backside. Now, the upper portion is a little different. Whoops, I need to click on that. Give me a click. There we go. And here's the upper portion of that rising price channel. Now, what I should do here is let me go ahead and I'll take the top line. Let me see if I can do that. I think I may be able to adjust the I can't adjust the top line out there, can I? Let me try to apply that. That did the bottom. That was the base trend. Let me maybe I can do that. Apply. There we go. Back there. Where is the where's the top? Where's the top? It should be right in front of me. Here we go. Okay, I can do that. Hey, you gotta love this software out here. It lets you do anything that you want. So that red line out there, it becomes if we see a break above this yellow diagonal line, that little shorter term rising price channel, price ought to gravitate up into the red line out here. And so you've got really your parameters. That's just simply using some simple trends and really, folks, when you're doing this stuff, some of these tools I think you don't have to be much of a technician. You can be just kind of, to know that you're trying to identify the largest number of co-located, either opens or closes, and that the body of the candle is truly the essence of price. And if you want to understand the trend and you want to do it on whatever time frames it is that you trade out there, it's a great way to do it. It's the simplest way to start. Go over. Go ahead and try the eSignal software. It really is good. The charting tools that are on there. Go, and call them, tell them that we sent you from TFNN, and we don't get anything for it. You are the one who gets something for it. You get 60 days instead of a 30-day free trial on there. So go ahead and do that. So there's the Dow Diamonds, which, as we know, the Dow has been struggling here as of late. So let's go ahead. Let's do this while we've got the time. Let's go take a look at we did the diamonds. We did the spies. Should we do the Qs out here? Yeah, why not? We'll do the Qs, and we'll take a look at the longer-term time frame out here. In this case here, we're just simply going to come back into 2009 and take a look at its channel lines out here, just so that we've got those drawn for you. So I'm coming all the way back into the March 2009 time frame. We're going to go ahead and connect the dots there. The bottom is really well cemented here, in my opinion, from a channel line perspective, and I'm going to say the top is marked off pretty well also. And right now, what we can see is price is broken out of. It can't really break out of it, right? It's trading above the rising price channel. How can you break out to the upside if you're already rising? Really, you can't, right? But it's trading just above that level out here, and you can see that inside the QQQ, boy, they're not even close on a weekly basis. They're really not even close to. They've given you a nice bearish signal last week, no question about it. But they got a long way to go before their change in trend would be in place out there, and that's kind of similar to what we were looking at on a shorter term basis when we were looking at when we were taking a look at the NQ out there. So that's the weekly chart there. Let's go ahead and finish this off out here by taking a look at the Russell 2000, the IWM, and the Russell 2000. If we take this all the way back into the 2009 time frame as well, let's go see what it is doing. I got to go back a little bit further in time out here. Okay, so let's take a look at the Russell. Let's go draw our price channels in here and see what they look like. This is really the channel line out here, in my opinion. And the top of it is right about there. How about that? So there's your channel line for your IWM. I'm going to pull this back down just a bit out here. And you can see it's trading right at about the midpoint, right about the mid-stroke out here. So if the IWM is able to break, we've been talking about, or I've been speaking about the consolidation pattern, and the most important thing you can do is to try to identify consolidation patterns as early as you can. The consolidation pattern along the top of the is right about there, and the bottom is really right about here. So there's your consolidation pattern. In order for, if in fact the IWM breaks the consolidation pattern, one, it's got a measured move somewhere between about 20 points. It'd be 108 to about the 120. No, so about 12-point move. So 12-point move below 108 takes you down to, 96 or so. And the 96 would actually break this rising price channel out there. Of course, it could break it intra-session. But a break of the consolidation level and where price ought to fall to, what you would use as a target level. And to break the consolidation, don't use 108.48. Let's use the trading session here from February 3rd. So breaking the February lows, which is 107.27. What you ought to have on your target line is this rising price channel. So that's utilizing rising price channels out here for the 4 ETFs, indices out here, 4 ETF index traded funds out there. And that gives you a more intermediate term, really longer term as well, because we went back to 2009, right? So that gives you a better feel for what's going on. As I say, we've got some warning signals to be paying attention to, but let's do all that we can to just really kind of keep things in check here and keep things in perspective out there. Now, so much for that. Let's take a look at, that's how I see things. But if you see things differently, give me a call. This is important that the beauty about the markets that we trade is we've got bulls and we've got bears. And we've got one other thing. We've got folks that are maybe agnostic, maybe neutral. Neutral is not a bad position to be in at times out here. And this may, in fact, be one of those time frames out there. So, just kind of focus and pay attention to what's going on in the charts. Let's take a look at some things that are moving here this morning, because the markets are really relatively stable, meaning we're not, Dow's up 35, S&P is up 6, so there's not a lot going on inside the market. It's given me the opportunity to go ahead and draw those patterns in there to give you a feel for what's going on. But now let's go take a look at some things moving up, moving down, and so forth. Let's take a look at, we've looked at Copa Holdings trading to the downside. We've looked at Theratic Corp. We haven't looked at CF Industries. That's down about $6. Let's go take a look and see what that is doing. It's off about 2% here this morning. Looks like, let me switch over. Yeah, we got a daily chart out here. This morning was pushing lower with some accelerated volume, 656,000 shares. It's well off of its session lows out here. Let's pull this back. CF Holdings, let's go see where it's got. So CF Holdings, let's assume that CF Holdings is going to break out. There was a call, was it this hour, last hour? I can't recall. Might have been, it was this hour right here. Here's where gaps are important. Now, gaps, just so that I put things into perspective that is more easily understood, because the question was, will gaps get filled? Here's the deal with gaps. Gaps are your friend. Gaps are the beginning, many times, of either accelerated volume-wide price spread, a breakout to the upside, or a breakdown to the downside out here. So that's what gaps are used for, and that's why they're your friend. So when we say gaps are getting filled, potentially, it's not a negative thing. You actually want to see something move down into a gap with lighter volume. So if we take a look at CF Holdings out here, it's got a gap that's been tested. That's right around the 225 level, even, Stephen. That's the December 4th low. That had a breakout session. That had volume of 4.2 million shares. Price has tested that level on many occasions out here. The last time was with 882,000 shares. So lighter volume. That was a key reversal session, by the way. Price went ahead and made an A to B equals CD to the upside out there. Now, where's your next potential buy in CF Holdings, CF Industries out here? Well, it's going to be at the bottom. It's going to be at that gap line, that 225 level. That's going to be your first area. Your second area is going to be actually at the very bottom of the gap. So it's going to be the high of the session that it gapped away from. And that's right around the 217 mark. The exact number is 217.50 out there. And that's what, so far, unless CF Holdings breaks through that area, that in essence would be your buy. Now, if you're coming down with accelerated volume, then you want to make sure that your foot is not on the pedal out there. You want to take your foot, in fact, off of the pedal. But that's what CF Holdings is doing. That's what it looks like on its daily chart. See, we've given some back. The market is to say, hey, it said, Steve, what do you mean we're not doing anything? I want to go ahead and take back some of those early gains that we had out there. Right now, the Dow's up 13. Let's take a look at What else do we have? Moving to the downside, percentage-wise, Revance, it's R-E-V-A-N-C, Revance Therapeutics out here, down 13%. Looks like with volume as well. It's trading at $22.34. This does not look good. Looks like this was an IPO from February 6, 2014. So basically nobody, with the exception of a few folks that got in at the very open of the IPO, are in the profit picture for Revance Therapeutics. It is extremely oversold, but don't go bottom fishing inside of this equity. I don't see any reason why you would do that at this stage. Let's take a look at what else do we have moving here to the downside, percentage-wise. Zulily. Let's go take a look at ZU as the ticker symbol. They were out with the numbers. They generated revenues of $285 million versus $145. Boy, that's a nice top-line beat, but I don't know what same-store sales is on that. I can tell you that their net income, I can't tell you what their net income was. That's silly. Anyways, let's go take a look at the stock. It is trading down as we speak this morning, but doesn't look to be like too much technical damage. Now, here's a stock that came back into its breakout level and never really held out here. This thing had wide price spread, accelerated volume. Let me pull this back a little bit. It's a daily chart we're looking at. This is on the trading session here of February 25th out there. And as price came back, that had volume of 7 million shares. And as price came back out there, you saw it close below that gap on March the 27th. So it was inside there. It was trying to fill the gap. It, in fact, did that. The day prior had volume of 902,000 shares. As price came into that level, was picking it up. It was on 2.2 million shares. And that's not something that you like to see out here, and that's in Zulily. So there's what you use as a tool from a volume standpoint to say, hey, I don't want to buy this breakout. I don't want to buy this gap out here. Now when we take a look at where it's trading, it's got a high volume, low, nice candle out here, but this is May 14th, so maybe not so nice. So it does say that Zulily at some point here is going to go test that low, 28.75, before it really releases any additional information to us. That 28.75 is very much a low. So here's another equity where not a lot of folks are in the money inside of this position. So at this stage, I would say stay away from Zulily. Gulfport Energy, GPOR. Let's go see what's the news behind Gulfport. Looks like they generated net income of about 47 million shares. That was 56 cents a share, but I don't know what that was going against out here. Nonetheless, let's go see what it is doing. Gulfport, GPOR is the ticker symbol. It's had quite a wide price spread day, but well off of its session highs out here. It actually spiked higher intraday so far. It got up to 59.83, trading out at 56.58 out here. This thing has been in a decided downtrend out here, and it was trying to take out that trend here this morning is what it looks like. I'll use as the trend line. I'll just come back here to about the May 5th level, and you can see that it traded really right into that area here this morning, and that's where it found some resistance out here. So in order for Gulfport Energy to really get bullish, it needs to get above today's high, which is 59.83 out there. Right now, we've got the Dow. What do we have the Dow? It's up 4 points. S&P is up 1. This is Steve Rhodes. This is TFNN. We'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow's up 17 points right now. S&P is up a point. NASDAQ Composite down 3. The real struggles at the moment out here in the market, the DAX over in Germany. Let's go take a look at what's going on over there. Trading off about 0.9% as we speak right now. Trade out at 90.50 and change. So as we take a look at the DAX, 9051.55 out here, we have seen no bullish reversal signals for sure. The DAX is trading right into, as we speak right now, the swing point from March 14th. Let me pull this back. Let me draw that line across the bottom of the screen out here. So as we take a look at the DAX, the top of that candle session from March 14th is at 90.94.24 out there. Let me just do this. It'll be easier for you to see. I probably ought to just do this to begin with. Just center that darn thing. There we go. I'll just make that change. So 90.94.24. So you can see you're trading inside there. Yesterday was a test of that area and a rejection of that swing point. I don't have the volume, so I don't know if it was coming in there with volume. If it was coming in there with volume, then what it suggests is a test of that low, the low from March the 14th. And that price level would be at 89.13.27. If it was a test on light volume and it rejects it again today, then the move to the downside, that 100% move to the downside would be over, and the DAX would be doing something something different. That's an important level to be watching for as well. If you're going to take a look at other swing points in February, well, it's December. In February, it's already trading below the February 4th level, but that's what it's also testing. Let me pull this back here. So let's take a look at the February 4th low right there. So that's at about, 9071.25 out here inside of the DAX. Let me go ahead and center that, and let me just try to change the color. We'll just make that one a yellow line, I believe. I can, nope, I can't. That's not what I meant to do. Yeah, I can do that. Give me a moment here to do this on the fly that way. Okay, there we go. So there's our yellow line inside of the DAX. So that's at 9071.25. That's the February area, and you're just slightly below it as we speak here right now. So the key inside of the DAX in Germany, maybe we get some type of signals from it. It's going to be that at this stage, the swing point low from March 14, 2014. But it's very close to having made this 100% move of a move out here. And unless it breaks through that area, you can see it's in the extreme oversold condition out here. We'll use that 14-period relative strength indicator. Right now it's reading at 26.07. So it needs to work that condition off here, which could be just simply a bounce, could be a move sideways or what have you. But that's what's going on inside of the DAX. Inside of the FTSE, actually going to be easier for me to show you inside the FTSE what it's doing by bringing over my other chart here that I've got. So as I take a look at the, for this, by the way, is the Nikkei. Last night it came right down to the bottom of potential rising price channel out there and acted as a support level. Inside of the FTSE out here right now, trading below that very bullish pattern. And that says there's nothing more bearish than a 3 drive to a bottom pattern that fails. And that's what's taking place here. So the FTSE, if it continues to move lower, it'll go down to the bottom of its consolidation, its 430-point consolidation move. And that's down at the February 5th lows. That's right around the 64.23 range out there. So, folks, it is a terrific Thursday. And don't forget, we've got a full lineup for you today. Following the show, it's our man Basil Chapman. After Basil, we go do the Futures Hour with Larry Pesavento. Then we've got Daryl Martin, David White, the Tom O'Brien Show from 3 to 5, and Andy Heck from 4 to 6. So it is terrific Thursday. And just remember this, folks. You have an amazing power within yourself. And that power is so strong, it'll create a life of abundance. It'll cure incurable diseases, build billion-dollar businesses, paint magnificent masterpieces, but most of all, folks, it'll create fantastic, loving families. Thanks so much for being a part of the TFNN family. Have a great trading day. I look forward to seeing you bright and early on fabulous, fantastic Friday morning. Take care.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.